said we should prepare. He said we could have machinery as manufacturers products for the agricultural industry for the year, and then we have the balances which were extracted. We have ordinary shares, share premium. Ordinary shares, I think you know what ordinary share is. Shares sold to almost owners of the business. The share premium, we're talking about the additional value we have from the nominal value of the shares. Retained earnings, which would be the profit made by the business that has not been, which dividend was not paid about, or which is kept for future purposes. This becomes our reserve. Then we have the general reserve, which is a certain amount of money kept for any purpose regarding the business. Then we have the capital replacement reserve. We get capital replacement reserve as soon as we buy back our shares without using shareholders' fund to buy it. Then the value we have is whatever, if we are able to do that, we call it capital replacement reserve. Now, we have additional information. On 14th of February 2019, the final dividend for 2018 was paid to shareholders. The dividend was 0.02 per share. So, our share, the value of our share is 650 million. So, 650 million multiplied by 0.02 will be the value for dividends that has to be paid. So that's 650 million multiplied by 0.2. That's 13 million. So the value of our dividend is what? 13 million. So this value will be taken away from our retained. So for our retained earnings now, for our retained earnings, we have the first figure we have for our retained earnings is 28 million. 28 million. Let's use dollar sign. 28 million. Now we have dividends, which have to be less 30 million. That's clear. Under retained earnings. Then we have on 31st of March 2019, 8 million was transferred from retained earnings to the capital replacement reserve. So our capital replacement reserve, we have an account for capital replacement. Capital replacement. For capital replacement, the value is how much? For our capital replacement, we have 1 million. The value is 1 million, right? 1 million. Now, 8 million has been transferred. So we're going to have transfer as an item on the vertical side. We're going to have transfer as an item. We add 8 million to it here. Then we'll go back to our retained earnings with less 8 million of transfer. That is transfer. Clear? The second information is on. Now the third information. On 30th of April 2019, the directors agreed to revalue the non-current assets. The current valuation is 5,500,000 and agreed value is 7,500,000. So we have revaluation, which is another item. So we're going to have our evaluation, which is now 7.5 million, 7,500,000 minus 5,500,000, that's 2 million. I think that is clear. So our evaluation is 2 million. Evaluation is 2 million. Together, to get evaluation by taking away the agreed value from the previous or the historic value of that asset, non-current asset. That's our evaluation. This is done. Then we'll go further. On 31st of October, on the 1st of July, the directors agreed to create a foreign exchange reserve after agreeing to supply an overseas customer. The order was for 120 million and it was decided to place 5% of this amount in the reserve. So we're going to have our foreign reserve. For our foreign reserve, it's going to be how much? 5%. So we have our foreign reserve. An account on its own. So 120 million, which was the value of foreign exchange, or the value of what is supplied, multiplied by 5% of it. So 5% of it goes to foreign reserve account. So we have 0,000. 20 million, sorry. 120 million. So 0,000. So that's 120,000. So 120,000 multiplied by 5 million, that's 6 million. So this is the value for foreign exchange. Is it clear? What foreign reserve is that amount you kept aside to buy foreign currencies in case you have transaction with foreign customers or foreign businesses. That is done. Then we have the loss. They said the loss of the year. No, before then, on 31st of October, 31st of October, the balance of the general reserve was transferred to retained earnings. So we have our general reserve. Another item that general reserve. General reserve. What's the value for general reserve? 9 million. Now, there's a transfer of. Was transferred. Okay, well.
To retained earnings.
On 31st of October, the balance of the general reserve was transferred to retained earnings. The general reserve we have 9 million was transferred to retained earnings. So our retained earnings on have general reserve here. General reserve, we had it 9 million. Then we go back to our general reserve account, we less it 9 million. Done. Is it clear? Yes. So they said the loss from the 9. Yeah. No, general reserve. This was a transfer from retained earnings to the general reserve, right?
No, it was from the general reserve to the.
Yeah. Well, where is it? Transfer. Hold on, please. I'll check it. On which day?
October 31.
8 million was transferred from retained earnings. You less it from your retained earnings, and you place it in your general reserve. Hold on, they said this is right. On 31st of October, what is it? This?
Yeah.
The balance of the general reserve was transferred to retained earnings. And the balance of general reserve was 9 million, right?
Yeah.
Yeah, we are supposed to add it here. We left it here, we had it here. Yeah. Thank you. We had it here. So now we have this together. We have 28 million plus 9 million. That's 37 million minus 30. The value here is 12 million. So this is the value of our retained earnings. Don't pass it, pass to the other side. You get it now? So that's the value of our retained earnings. Clear? So what else we have? Our capital replacement account. We have 9 million. Right? Yeah, okay. We have capital replacement account 9 million. Then we have our evaluation, which is 2 million. What is our foreign reserve? We have 6 million. I think that's all.
Yeah.
Is it clear now?